Dear shareholders, today we published our results for the third quarter of 2019. Overall, the third quarter is characterized by continuously strong earnings growth, especially for the bottom line, as well as stable cash generation of the operations. Earnings for both top and bottom line have grown significantly in year to date by close to 30%. In year to date, operational earnings are reaching 3.5 billion TL, which is close to the year-end figure of last year of 3.8 billion TL. For the bottom line, underlying net income has even already exceeded last year's year-end level of 730 million TL, reaching around 800 million TL. Compared to the first half of this year, this means a slowdown for top-line growth due to the increasingly high benchmark from last year, driven by high inflation, while bottom-line growth has accelerated with lower interest expenses stemming from both lower inflation as well as lower interest rates. Given the recent steps by the central bank to significantly reduce the policy rates, we are able to use the full flexibility of our financing structure to reprice our loan portfolio. We expect both trends to continue for the last quarter of this year. As a result, we expect year-end operational earnings towards the lower end of the guided range of 4.6 to 4.9 billion TL. As a negative impact of inflation for our top-line growth will be at least compensated by lower interest expenses towards the bottom line, we expect year-end underlying net income to exceed 1 billion TL and therefore grow by more than 40% compared to prior year. With regard to our cash flow performance, free cash flow after interest and tax has turned negative again in the third quarter. While the underlying cash generation of the businesses remains stable, this represents a deterioration compared to the first half, mainly driven by, first, the retail cash flow normalizing after reversal of the working capital built up during 2018 as a result of regulatory mechanisms in the first two quarters, and second, interest payments spiking in the third quarter due to a clustering of semi-annual payments and prepayment fees. For the year end, we reiterate our target to turn cash flow positive after interest and tax. Consequently, and similar to last year, we expect a very strong cash flow performance in the last quarter of the year, driven by OPEX and CAPEX related payments spilling over the following fiscal year. We look forward to providing you with some more details in the presentation later. Until then, take care and have a successful day.